Hello traders, Gary Wagner here for Trending Markets, about 10:30 in Honolulu, 4:30 in New York. Equities markets in the U.S. have closed today. Dow Jones Industrial Average closing up. The interesting story is not so much the close in the market, but really the oscillation that it had throughout the trading day. And really, to best illustrate that, I've pulled up a chart that I very rarely will use, which is a 5-minute candlestick chart. Market closed yesterday roughly at 16,000. I believe it was 16,002. So I'm going to put a line really at the close of yesterday's market and then draw another line here which illustrates where the market opens. So the market opens, it trades higher on the day. This is the high 16,120, but from there goes into negative territory. So we start in positive, we go back to negative. From there we oscillate back to positive territory, 16,060, back to negative territory here, to finally close in positive territory up near these highs right here, up about 47 points. So we had 1, 2, 3 occasions, including the close, most importantly, where the market did trade above yesterday's close, but we also saw 3 occasions where the market was in negative territory, absolutely trying to find some footing after the dramatic 300-point drop that we saw yesterday. Now, when we look at U.S. equities as a whole, it wasn't all that rosy. Up about 1/3%, 0.30% in terms of the Dow Jones Industrial Average. But when we look at the S&P 500, this being the E-mini contract, you can see that that closed up 0.1% as opposed to 1/3% on the day. And when we look at the NASDAQ actually closed under pressure today, down almost 0.5% on the day. So we still have some very, very mixed signals in the U.S. equities markets, and my sense is that we'll probably still have some downside potential and actually drift lower over this next month, meaning the month of October. Now, in terms of oscillating markets, we definitely got that in crude oil today. Crude oil up almost 2%, 45.24. When we look at our daily chart, you can see this is yesterday's sell-off, this red candle, today this green candle. Pretty much the entire range that we saw yesterday, we had this market trading in today, closing near the top or upper end of the range. Today, closing near the lower end of the range yesterday. Really, what is most noteworthy as far as I'm concerned is the fact that we have identified a flat bottom. We really have some solid support here at $44 per barrel. We also have this ascending set of tops, meaning we've got a series of lower highs, and we are quickly approaching the apex of this pattern. But the real picture in terms of oil right now, I think, is most prevalent when we take a look at our weekly chart. And let's go ahead and pull that up, because here's what I'm noticing. I'm noticing an extreme amount of consolidation in the market. Consider this. When we had this market track up to about $60, it hits these lows at around, I believe it was 42 or so, hits these lows. Market moves up. You could see a extreme amount of consolidation over the period of almost a 2-month period of time right in here. And that happened right before we had a dramatic fall in the market and actually fell to make the new low below 40. Now, the market pops up a little bit, but we're getting that extreme level of consolidation again. And it seems as though, my sense is, we will probably see oil break to the upside. I do believe that the best play out there in oil is going to be positioning ourselves from the long side, but I want a little bit more concrete information, meaning I like to see this market either break above 48, as we talked about, or below 44 to really get it out of this muck or sideways trading pattern. But considering there was 1, 2, 3, 4, 5, 6, 7, 8 weeks in which the market tracked and traded in a sideways manner back in May, and June, the fact that we've only got 1, 2, 3, 4, 5, we've only had 5 weeks, we could easily see another couple of weeks of consolidation before we see this market move up. But as I said, this particular market I am extremely bullish on, but I do want more confirmation. In other words, I want to see it break out of this range before we make that defined move, because I believe that if it does break above 48, it's probably going to track and try to trade back up to around $60 per barrel. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update, review, and trending markets. Bye-bye.